What about the cooling off period that's proposed by the Real Estate Association?
That's quite a big thing.
A lot of headwinds in the economy with what's happening in the Ukraine, for example, price of gas. I mean, where does it all kind of stop?
Right now you're given 15-minute windows to see a house, and that you're going to pay a few $1 million for. And you have to write an offer for it, highest and best, within the next hour. Hey, good morning. It's Alex Yao with Remax Select Properties.
And Chris Cornborough with Forefront Mortgages.
And this is your market update for March 2022. Wow, it's already March.
I know, it's weird.
First quarter
almost
done.
Through, yeah.
Well, over the last month, very, very busy in the market. I mean, we're still seeing a lot of multiple offers over the last month. Prices obviously going upwards when that happens. So Vancouver East houses went up 3.1% last month. Houses in Vancouver West, 1.2% growth. Townhouses, Vancouver East up 4.5% in the month on average.
Wow.
Vancouver West went up also 4.5%. Condos went up 4.4% in Vancouver East and 2.1% in Vancouver West. So this is all over the last month. So a lot of growth. And then, interesting fact, Vancouver downtown, Vancouver West Side houses, Vancouver West Side condos and townhomes, and same for the Vancouver East Side. Moderate increase in inventory, dramatic increase in number of solds. So, for example, downtown, 8% increase in inventory from January to February, 50% increase in solds.
Good.
January to February. Vancouver West Side houses, inventory went up 7%, solds went up 60%.
Wow.
Vancouver West Side, condos and townhomes, inventory went up 11%, solds went up 44%. Vancouver East Side, houses, inventory went up 20%, but sales went up 80%. And Vancouver East Side condos and townhomes, inventory went up 15% and solds went up 32%. That's quite an increase in the sales ratio.
It seems like an earlier start to the spring. Or maybe the market's just been so crazy that there's not really a seasonality to it.
Or does it have to do with the increase in mortgage rate?
Yeah, it could. A lot of people were pre-approved in November, December, so meaning they've got to buy now, March, to complete to get those older rates. But yeah, I mean, I think the 0.25% rise in prime rate last Tuesday, effective on Wednesday, it was expected. So this is not really any surprise to anybody. I think what will happen in the next 6 months is really hard to say. There's a lot of headwinds in the economy with what's happening in the Ukraine, for example, price of gas. I mean, where does it all kind of stop? Everything seems more expensive, and then if you make the cost of borrowing more expensive, does that really solve the problem? To me, it would seem like we would need more supply of houses.
Well, that's always the case.
Of gas, oil, right? Like, things of that nature to maybe like help balance it off. Money, exactly. Cheaper mortgages.
It's interesting. I think over the last couple of weeks, probably just at the cutoff of the end of February, I think a lot of supply kind of starting to flood out. And it's interesting to see. It could be because of the uncertainty of the war, like you said. It could be, the rising interest rates, the inflation, gas, all these things kind of combined together. So that'll be interesting to see. I'm a little worried about it, but I mean, with our kind of free economy type of market, it's always, it always seems to protect itself.
I mean,
over time.
Yeah, people coming here now that COVID's sort of over, almost over, give or take. Like, will be more immigration, more people going back to the office, more hiring. I don't know. Like, that could balance off any issue. What about the cooling off period that's proposed by the Real Estate Association?
That's quite a big thing. I think most people probably heard of it already. If you haven't seen it on Facebook or Google or Instagram or whatnot. So the Minister of Finance has been proposing cooling off period, which is essentially new legislation that'll be written into the RESA, Real Estate Services Act. And essentially what it means is that kind of like pre-sales where you have a rescission period of 7 days. This might not be 7 days in the resale market, but probably 3 to 5, I would say. That's kind of the ballpark they're gauging for. Where after an offer, you're given 3 to 5 days to do your due diligence on home inspection, financing, all these things that should be done for most people, that unfortunately the market doesn't quite allow them to do these days, which I completely understand. You know, it's hard to, you know, right now you're given 15-minute windows to see a house, and that you're going to pay a few $1 million for. Yeah. And you have to write an offer for it, highest and best, within the next hour. It's difficult. It's very difficult. And I absolutely sympathize with all the buyers. And I'm in that boat with my clients. Yeah. It's not easy. And I think it's a great idea for consumer protection, but the way it's going to affect the market itself, being a post-offer exercise, it could be quite harmful. I mean, think about it.
Harmful to the seller or the buyer or both?
Both.
Okay.
Seller first, and then the buyers. Yeah. So I'm sure that, you know, most people watching this, and most people that follow the market, follow us, you know, they're all genuine people, genuine buyers, genuine sellers. They're, you know, looking for space for their family. They obviously want protection, more protection. But there's also these investors, a lot of investors in the city. I mean, what are they going to do? If I was an investor and I'm looking at, you know, okay, it's all dollars and cents to me then at that point. I don't care if it has a skylight. I don't care if it's, you know, next to SkyTrain or not. Well, whatever. For growth purpose, maybe. But as it sits, dollars and cents. So if I'm liking, let's say, these 10 properties, what's stopping me from making subject-free offers to all 10? And then, after we win everything, or win some maybe, then the ball's in my court. Now I can see which one I'm going to swap in the next 3 to 5 days.
Yeah, that makes sense.
And guess what? All the other buyers who didn't get it, because I outbid them, which I may now take back, now they're going to need to go pay even more for the next place.
Yes, that makes sense.
Right? And everyone needs to pay more to buy, essentially, because the buyer's pool just grew.
Yeah, because I guess if you're an investor with this mentality, you could go bid whatever you wanted to, because who cares?
I'm sure a lot of investors will have that mentality.
Yeah, that makes sense.
Right?
That makes sense.
So that's one.
Now, if you have people that are bidding on a property, and let's say you're the first bidder, and then you've got a 5-day period. If I bid an hour later, do I kind of get in line for that, or is it how does the second and third buyer kind of pool work?
So what we understand is that it's the process of bidding, the process of taking offers, the process of getting an accepted offer is still going to remain the same. Let's say, you know, what's common practice now, you know, show open house on Saturday, Sunday, offers by Monday at 5 o'clock. Right? And so 5 o'clock, you'll have all these offers that come in, let's say 10 offers, 20 offers, whatever it is. And then you pick the best offer for your client. Okay. The seller's agent needs to educate the client, the seller, on which offer is probably better for them. Right? It's not necessarily money. Sometimes it's the dates that they need and terms and whatnot. So we take one offer as a seller. Now the buyer side, there's 10 offers, so 9 people didn't get the property. So they now are looking for another one.
Got you.
Right? And now if this buyer of the actual buyer that got the accepted offer, he pulls out for any reason, because he's trying to play the market, multiple different properties. He pulls out. Now the seller has nothing. Those 9 buyers are gone.
Got you.
Right? Unless they have a backup offer in place. And I mean, that may be commonplace if that's a direction.
That's what I was kind of alluding to. Like when you have all these backup offers, that would sort of then like a domino effect, where you'd call the second best offer, then the third best offer.
But there's no sense of security for sellers. And guess what? These buyers are going to be sellers in a few years. They're going to be in that boat. Right? It needs to be a balance. So BCREA has published a white paper over the last week. I agree with it a lot more, obviously, because they've consulted with all of us and before publishing that. So instead of a rescission period post-offer, we do a pre-offer period, cooling off period, if you will. So maybe the first 3 to 5 days, no one can make an offer. So there's no essential.
It's got an open house on Saturday. You can't bid on it till Wednesday or something.
Could be.
Whatever.
It could be 3 to 5 days after the first showing.
Yep.
I think that would make more sense than 3 to 5 days after being online, because who knows, 3 to 5 days may not get any traction or get anybody to see it. So that could very well be it too. And I think by doing that, you allow people ample time to do all their due diligence. Things that they need to do. They can talk to you, mortgage brokers, and then just to see if you can get it approved. They can do a home inspection. They can go through all the documents if it's a strata unit, and go to the city if it's a single detached house to pull any permits they need to do. They have ample time to do that. And then whatever offer they make based on their educated decision, I think that protects them, and that also protects the sellers, because now it's a firm deal. Right? That makes a lot more sense to me, I think.
It does, it does make a lot more sense.
So we'll really have to see how it comes out. But
well, knowing the government, it will probably come out the exact opposite of what it actually should be.
Just
guessing. I'm just guessing.
And I think the government also puts a lot of weight or blame, if you will, on BCFSA.
Absolutely.
Whereas, unfortunately, their hands are tied sometimes with politics. So, I mean, at the end of the day, it's the consumers that's going to feel the effects of the cooling off period.
It's an adaptable industry. I figure you guys will get through it.
Of course. Of course.
But I agree with the mechanics. It doesn't actually make a lot of sense.
It doesn't.
Having the first buyer or offer tie up the whole property for whatever.
But I agree with the point, though. I agree with what they're trying to do to protect consumers. Absolutely. But protect both sides.
And
you
then
know what I mean?
You've got to and then you've got to sort of speed up the process, because after 3 or 5 days, if the first offer falls apart, then you have to do all that work again as a listing agent, and then bring these same people back. And I don't know. It seems
I'm fine with doing that work, but just that's our job. But the sellers are the ones.
It seems inefficient to the sellers.
Exactly.
You got to wait around.
To the actual clients.
And then you're going to go try to buy something. God forbid it'll be. It could be it could be a drawn out period.
I'm all for consumer protection. At the end of the day, I'm a consumer too.
Totally.
And we all want what's fair.
Well, our industry is the same. I mean, nothing's worse than a subject-free offer, because for us, it's like, okay, well, now we really have to make sure that we've dotted the I's, crossed the T's. And there's always stuff that's lost in translation in the business. So, sometimes people will go in with a subject-free offer, and then they'll call a mortgage broker. But it should actually clearly be the reverse, where you talk to us first, and then we tell you, okay, you're good. But there's still things that can come up. You could lose your job, or there could be something with property that no one knew about. Lots of nuances, right?
Exactly.
or maybe in this instance, you can't sell your existing home as quickly because of this legislation that's proposed, and then maybe that is kind of delays or could impede the purchase. You don't have the down payment. There's lots of things that could.
It's going to affect the people that are selling. It's going to affect the people that are moving. I mean, first-time home buyers, they may not see it. They might see it as a great thing. But then they're going to be selling it one day. They're going to be moving one day. And that's going to affect them.
Well, you need to rely on the contract being kind of like valid and firm. I know in other jurisdictions like the US and in the UK, I think you can pull out of your contract like the day before completion for sort of like any reason without having really much at risk, which would be really terrible if you're trying to figure out your life situation.
What's the point of a contract? What's the point of a legal binding contract?
Exactly. So anyway, knock on wood. Knock on wood, they'll get it right.
Okay, so over the next few months, spring, what are you thinking?
I think it'll be busy. It seems that people are still making moves. We're pretty busy. Interest rates, you know what they are. They've gone up. The fixed rates have gone up a fair bit in the last 6 months, but they're still below where we were prior to COVID happening. So you can get a 5-year fixed rate in like the 3% mark, whereas in December of January 2020, right before COVID. That was like the month before COVID. We were in the 3.75 range. So we're still money's still cheap. Prime rate was 3.5 or whatever have you. So we're still really. If interest rates are the driver of your decision making, and we're at historic lows, that's kind of a problematic situation. But I get, like, especially with what we talked about earlier, with everything going up, you know, like gas is $2.20 or whatnot, especially for nicer cars. It's probably like $3 a liter, right? Everyone's taking transit nowadays. Every little bit helps, and these interest rates, you know, they add into your line of credit, your credit card, you know, your home equity line of credit. It just, everything adds up and kind of eats into the pie, which seems to be getting smaller and smaller for a lot of folks.
I completely agree. I think, you know, all these things combined at the same time. With inflation, with gas, with the war, uncertainties, and I mean, the rise in interest rates, I think, plays a very small part, like you said, but compounded with all the other things that are all tied in together, it'll be an interesting spring to see.
It's going to be, I mean, I hope, like, you know, obviously nobody wants war.
No, definitely not.
I thought this was going to be like 2022, you know, we're getting out of COVID, things sort of be coming back to normal, then we have a war in Europe. I mean,
it's horrible.
You know, who would have thought, right?
It's horrible. But all right, well, thank you so much, and
Thanks,
we'll see you next month.
Look forward to it.